Good morning, everybody. Friday, last Friday of the month, July 28th, just after 6 a.m. And I'm going to make this quick because you don't want to destroy your weekend by having a trade go against you on a Friday, a zero DTE. And there's been a plethora of money making throughout the course of the week. Yesterday, beyond fantastic. In fact, I believe I still have it up here. The 1 minute. Yeah. Your 29-cent SPY 455 puts for today that we were trading yesterday started in the morning, got 100%. I put out that alert right around 12:30 that they're down to 29 cents again. Run to 369. That's over 1,500%. You don't want to have missed that and now try and overcompensate for it today, or to have it replicated because yesterday was so good, today will be fantastic as well. We have a 24, call it today and call it Monday. That's the window. And inside that window, we need to get a drop on the SPX below 45.15. If we don't get that follow through, it's going to be the exact same thing like we had back in June. Back in June, we had this dip. You recall, we were down here at 43.28. Biggest dip that we've had since we started the rally in March. Because we did not get that follow through, if you recall, how we were looking to break down below that 43.36, got to cut it off. Right now, that's where we're sitting. We're sitting at that right now. And for the week, very clear and very obvious, we had closed right at the weekly candle. So we're literally 45, 43, 39, the weekly candle. Futures right now are up 17 points. The NASDAQ as well. Dow and the Russell not doing as much work as they should be. And those took some pretty big beatings yesterday. The 78-point drop yesterday after a 31-point gap up. And like you saw over in the spreads room, if I can pull it up, very early in the morning, I said, we are closing below 4,600. And that's the reason why we had both the 4,605, 4,600 trade, paid over 100%. And we had the early morning 45.90, 45.85s, which even went beyond that $3 level as we had that open there, ran up to 46.07, and then cratered on that Nikkei news. It has to happen, or we're losing every chance that we are going to get that follow through. Full moon is next week, so we're obviously tracking that. As for the spreads, we broke the bottom edge yesterday, specifically why you never saw any trades out there for selling puts. We did not get minus 1%. We missed it by 7 points. We did not get plus 1%. We missed it by 5 points. But you had one of the biggest range trade days that you have had since the middle of March. So don't try and overcompensate for it on a Friday because you missed out yesterday. There is plenty of time in the rest of the year to be trading. Yesterday's QQQ, 9.4 range. Massive with a 5.55 gap up. Wound up closing red just fractionally less than a point. Did hit plus 1% as it spiked up there. Did not get to 2%. Obviously going to be monitoring that today. So today, again, with the QQ or with the SPX, we need, okay, we need to see a follow through, and the follow through has to be breaking minimum the 45.15 and closing below it. And obviously we would like to take out last week's lows at 4,500. We need to see this, and we are going to be running out of time as we go into today and Monday. It will put a very tight constraint on the short-term shorts. That's the way that it is. Further dated out ones, nothing really to be worried about, but we need to see it that we are going to actually be starting a trend, or we're going right back into the same old shit. End of the month is on Monday, start of the new month on Tuesday. Then you get the jobs report at the end of the week, and the full moon falls in there together with Apple and Amazon's earnings. So on the QQQ, again, it was a nice dip, but same thing. Need to see that follow through to break down below 375, break down below 373, and start heading towards that 370, 367. Need to see that take place, or we are going to be losing momentum, which means we are going to be losing our chances of getting that further follow through to the downside. Over on SPY, very clear. You can see here, we have literally been trolling this area since July 18th. OPEX was on the 19th, trolling right through this area here, doing nothing. Same thing. Need to see a break below 450, 451. Get a break below 451. We start to focus there on 448, onto that gap that's there below. And then here over on the VIX, yes, you had a little tiny Volmageddon. Again, these are why you draw on your charts. You have your pivots drawn out, and my pivots go back years. As you can see, this has been working fantastically with this VIX 1339. You got below VIX 1339, you start to get very aggressive to the short side. Paid off. You tell me. 29 cents to 369. Do the math. 3.69 divided by 0.29. All right, minus 1. 1,172%. So it wasn't 1,500%. 10 bagger plus. So we need to see that follow through. And more importantly, like I've been saying for a very long time now, for weeks and weeks, going back to June, you need to see the VIX up above 1451 to even have a fractional opportunity to begin a chance that we could actually see some continuation to the downside. So keep it light, keep it real. For those that have left, hey man, apologize. Winners are winners are winners, 100%, 150%. They're there, 233%. And then once in a while, you lose a buck, you lose $2. Over there, over on the SPY, the QQQ, the DIA started working. Where were we at DIA? 320 on the close. So clear on that. The QQQs sent out the alert yesterday under 550, closed at 864. It's only a $3 gain. But yeah, if you live over in Alabama and you know exactly who you are because you've been trolling me for months because the Santa Claus rally started a week later than it was expected to, you need to find a big fat ass and stick your head up there and have a fantastic weekend because we are going to have a terrific August. And I tell you, it's going to get even better in September, guys. So get ready. Strap your boots on. Have a great weekend. I'll see you in the chat room.
Boom.